we was discussing about treatment of special items. So let's continue. We talk about interest. Now let's talk about dividend. Dividend is a reward which is being paid for giving the money or investing the money in a company. So we can recognize the dividend as a return which is generated. So when I'm paying the dividends, as we discussed, it is an expenses. So when the dividend is paid, it is always treated as cash outflow. If dividend is received from any other company, even though it is a cash flow. However, the interim dividend, the declared, it is not the part of cash flow because it's only a declaration or a provision made. It is not paid. Dividend is always paid at the end of financial year, and hence the dividend is not being considered unless it is being paid. Then treatment about taxes on income. Taxes on income are disclosed separately in balance sheet, treating the division of taxes, that is GST, income tax, and any other tax. While preparing the cash flow statement, the current year tax position should be added back, and whatever the actual tax paid, that only should be considered. Normally, the individual tax returns are filed by 30 June or 31st August. In both the cases, we follow the system in India that the first financial year will be closed and then the tax is paid. Similar way, the companies close their accounts on 31st March and they go under the process of understanding their tax liability. So the companies are practiced to follow the method where they have to plan the cash flow, they have to plan the further tax liability, and so they roughly estimate what is about a profit, and based on that, they create a provision. But since the universal law that if the provision is made, it is just shifting your income, it is not expenses. So if I make any provision for tax, it is not considered as cash flow. If the tax is actually paid, for example, last year tax is paid in this current year. So whatever the payments has done, that is considered as tax liability. But whereas if the payment is not done, only provision is made, then such provision is not and allowed expenses or income in cash flow statement. After 31st March, the companies go on audits and verification of accounts. After that, they have to approach the company law board for permission to disclose the financial accounting. And approximately in the month of September, October, they are paying the taxes which they are liable. So my year closed on 31st March, but I'm paying tax in September or October. So in this case, the tax liability of this year is shifted to the next year. But this is accrual basis. Now, what is accrual basis? We repeat again, paid or payable. If I make it provision, then it is considered that This activity of making provision is shifting the income. It is not payment. And since no payment, no entry in cash flow. In case of a numerical where you have the tax payment adjustment is available, it is always suggested to prepare a tax flow statement because this always helps to understand the glitch in tax payment. So let's read this slide for 1 minute. If any doubt, post in chat box. Please read it completely. If any doubt, post it in chat box. I guess no doubts. Let's move on. So this is the way we open the provision for tax account. Whatever the last year balance, it is always on credit side because the liability is there and all liability accounts are on credit. Then whatever the tax we pay, it is deducted because we are paying. So we write it on debit side. So in this case, the balancing figure is transferred as provision in P&L account. So we need to prepare the accounts in similar way. Please remember, tax paid should be subtracted after deducting the refunds. Suppose I have paid the advance tax, and if the advance tax paid is 40,000, but the actual tax liability is only 20,000, then the 20,000 is refunded by income tax authorities. Then in this case, I need to adjust the 20,000 against 40,000 and only count 40,000 as actual output. But here again, if the refund is created in another financial year, then a separate special entry should be made. And in earlier year, the adjustment is not allowed. If it is not being for earlier period. In absence of specific information regarding the tax or balance of tax or refund, it is up to the students to assume the tax liability or they can take a call about taxation if any value is present. It is normally suggested to be a correct numerical. The student should assume at least a tax rate, and for convenience, normally in advanced financial management, we assume 50% as a tax rate. So let me illustrate. We have the previous year profit and loss account balance 60,000. This year it is 1 lakh. So we got a profit of 40,000. Earlier it was a provision for tax 10,000. Now it is a 15,000. So we need to record this transaction about provision for tax. So I got a 40,000 as a profit. Earlier, the provision was 15,000. Sorry, this year the provision was 15,000. So, as per the law, this provision is added back in profits. So, 1 lakh minus 60,000, I will get 40,000. This 40,000, I need to add this 15,000 to get my profit because provision is not allowed. And that's why we can see on next slide, it is net profit before taxation is 55,000. And so in cash flow, I mentioned the net profit as 55,000. Please go through this. If in doubt, you can just put in chat box. I'll wait for 1 minute. Any doubts? I guess again, no doubts because students are so outspoken. I'm delighted that they never have doubts for any reasons and they follow the norms. No issue. Let's continue the further. Okay. So at least on the previous slide, we have profit and loss account at least here. It is 60,000 as opening balance. So if I open the P&L account here itself, my last year is my opening balance. Normally in profit and loss account, we write here the profits. So this year's my profit is 1 lakh. Sorry, this year profit is 1 lakh because I have to mention on credit side. And last year I'll mention 60 here. So 1 lakh when I deduct from 60, my profit for this year is 40,000. As per the rules of cash flow, the provision which I made in current year is not allowed because I have not paid the tax. And since I have not paid the tax, the 40,000 plus 15,000 I have to consider as my cash, sorry, my profits, and it will become 55,000. So net profit for cash flow will not be 40,000, it is 55,000. So the same which I shown is indicated in next working. The profit during the year, that is 1 lakh minus 60,000 is 40,000. And I have added back the provision for tax 15,000. So my net profit before taxation is 55,000. So when I calculate the cash flow statement, I'll first write down cash flow from operating activities. The first net profit 15,000 less income tax paid 10,000 and my net income is 45,000. Now, as I said, the last year's tax that is 10,000 I am paying in September or October month. So 2011 tax I am paying in 2012. 2012 tax I'll be paying in 2013. 2013 tax I'm paying in 2014. So always I'm paying next year. So here the provision of 15,000 is added and 10,000 previous year tax is deducted. Then I have net cash available 45,000. I hope I clear. Anybody has any other doubt? Let's move on. When I open the account, now this is simple calculation. My answer is 45,000. But if I make it in account, my balance brought down for provision for tax is 10,000. So last year my balance was 10,000. This year I paid 10,000. My provision is 15,000. So I have this 15,000. So this is the answer by me of accounts. So when you're doing the working notes in cash flow statement in your examination, you need not have both the things, account and working note. You can either follow any one note and that is sufficient for your scores. Please remember, if your working notes are incomplete and you are getting full marks, in such case, the examiners makes a choice to deduct your score because your marks are less. And important that you should always follow the working note pattern. If the working notes are not made, then if I find your scores are getting more than 35 or 40, then I do the revision of your paper checking. And in that case, your marks deduction, this is one of the options. So for cash flow and fund flow numericals, working notes are very crucial and essential. Let's move on. Following are the extracts from balance sheet of ABC Limited. Now, I'll wait for 2 minutes and I'm expecting those who are possible try to solve in rough and give me the cash flow. I'll wait for 2 minutes. I'll explain you, but I want you to work out. If anybody is done with the calculation, please post in chat box. Now, okay, I'll wait some more period. Now let's continue because I was expecting answer, but there is no answer. In this numerical, there is only one change. The same numerical we are seen in previous case. So 60,000, 1 lakh, 10,000 and 15,000. But here I have an adjustment. Okay. So 5,000. So we are really happy that at least you have tried and it's a 5,000. My dear students, please try yourself because this is virtual class we are taking. If you're not responding anything, if you're not understanding anything, you should ask us. So during the year, the numerical is same till this part. We have only one adjustment that we are paid the tax during the year is 12,000. Now, as I said, tax of 2011 is paid in 2012. I have made the provision of 10,000 and I have paid the tax of 12,000. So let me show you the workings. So the profit during the year was 40,000. The provision for tax is 17,000 and net profit before taxation was 57,000. So how it is 17,000? Anybody guess? Because if I calculate here, it's a 5,000 difference and it is 60,000. So how it is 17,000? So let me show you. The answer is here. And that's why it is suggested to prepare the working notes. We have the balance as 10,000 and tax paid is 12,000. We have created this year the provision of 15,000. So my debit side will become 27,000. And if debit side is 27,000, last year it is 10,000. Because this year I had to show in balance sheet the provision as 15,000. But since the amount which I need to create provision, I should have the funds. What I will see is I am having 10,000 initially and I paid the tax of 12,000. So if I compare this, then last year I have 22,000 and this year I have 15,000 as balance to be shown. So if I want to show this balance, then whatever the surplus or extra that need to be adjusted. So the 15,000 I want to show for this year, whereas actually I incur the 22,000, that is 7,000 extra than my provision. So I will add 10,000 plus 7,000 and 17,000 provision I need to make actually. So there is one question. So in balance sheet, it is showed as 15,000 and you are now telling us 17,000. The simple answer is the balance sheet amount is the closing and opening amount. It's not direct provision. The accounts which are having opening balance or accounts which has closing balance, they are disclosed at the end of financial year. And hence, we have profit and loss account opening balance 60,000, provision for tax 16,000. We have closing balance 1 lakh and 15,000. So if I prepare the both the accounts here itself, I have profit and loss account, and this is my taxation account. So in case of profit and loss account, my closing balance is on credit side because it's my profit. So I have 1 lakh here, Then my opening balance, it is 60,000 because profit and loss account has always opening balance on. So when I adjust these two figures, my profit for this year will be 40,000. So I guess in profit, there is no doubt. Now let's talk about the crucial thing, the provision for tax. Whatever the liabilities, they always carry a credit balance. So last year's credit balance was 10,000. So last year credit will be this year debit. So I carry forward the credit balance as 10,000. This year, I want the closing balance as 15,000. So this was the transactions happen. Now I want 15,000 as a closing balance because this balance on debit side will be shown in next year as carry forward. Similarly, the tax is paid 12,000. So when the tax is paid, we have the accounting entry as tax account debit to cash. So in tax account on debit side, I have to write down the amount which I have paid. So I have paid rupees 12,000. Whatever the balance figure here, I need to transfer to the profit and loss account. So if I take the total here, it's a 27,000, correct? And the debit side, it is 10,000. So how much extra I need to create? 27,000 minus 10,000. I need to have the amount of 17,000 extra. And then only the account will match. And this way, instead of 5,000 provision, I am creating 17,000. And this is the reason why the numericals of cash flow are incorrect. Because we just thought 10,000 minus 15,000, answer may be 5,000. But when I actually do the working note in accounts, I come to know that no, instead of 10 to 15,000, it is much more. Now, if I just assume that I made the provision of 15,000, but if I actually pay only rupees 2,000, then what is the effect? I'm sorry, I'll just change the color, it's not visible. But actually only 2,000 is paid. Then what happens? Then it is 17,000 and it is 10,000. I need to create only the provision of 7,000. Or if I just change this, if suppose tax liability is zero and I did not pay any tax, then in that case, the answer of 5,000 can be correct. I hope I'm clear. I'll again showing the both slides. Please remember when you have the adjustments in cash flow, you need to show the working notes. If you're not showing the working notes, it will be misjudgment for yourself and you are being unfortunate to get the wrong answers. It's a habit of normally commerce graduates. They are very practiced for shortcuts and they want everything to be done fast because the paper is for 2.5 hours, but I want to finish in 1 hour and go home. Like I feel keen if I finish the paper. And in that hurry, I normally forget that if I do not make the provisions properly, I do not make the adjustment properly, then I am certainly losing the marks because here The, I'm sorry. Here the answer is 5,000 if I plainly adjust because 10,000 was previous and this year is 15. But I'm ignoring the tax paid 12,000. So treatment of tax paid is also need to take in cognizance, which I understood by making the provision for tax account. So this is the whole working. I think I missed one numerical. Yes, I missed one numerical, so I'll skip this part. So any doubt in interest, dividend, and tax? Thank you for the reply. Let's understand the cash flow from investment activities. Investment is of two types. One is short-term investment and other is long-term investment. The short-term investment are part of current assets, whereas long-term investments are shown separately after the fixed assets. If the cash flow is generated or applied for long-term investments, then it is called cash flow for investment activities. In case I purchase or sell and the cash flow is applied to short-term, that is revenue nature investment activities, then it is considered as investments in current assets. In cash flow, whether it's a business or non-business, it's not important. It's more important that I have paid or I have received the funds. So, as per accounting standard 3, any activities where the cash is flowing in case of investment, it can be paying the installment, or it can be receiving the interest, or it is disposal of investment. If the cash paid or acquired, it is part of your cash flow statement. Therefore, cash paid for tangible or intangible or fixed assets, including the capitalization and R&D cost, they are covered under cash flow if I have paid. Cash if I received from sale of fixed asset or sale of my investments, then again such cash received will be allowed as shown in a cash flow statement. If a cash is given as advance or if cash payment is made against some mortgage or some other purpose, even the purpose is not business, except the personal use of proprietor board of directors, everything is allowed under cash flow. So if the advance is for payments in next year, but I paid this year, since the money has gone, I have paid the amount. The amount which I paid for investment or advance payment against my investment is considered in same financial year. For example, insurance premium of 2028 is paid in 2026. So as per tax, the payment of insurance installment is 2 months in advance. But as per cash flow, since I have paid the amount, and enjoying the amount. The actual flow of money will be considered as outflow. Prepaid, advance, these terms are accrual basis, and in cash flow, instead of accrual basis, the flow of money is more crucial. When I prepare the fund flow statement, at that time, prepaid or outstanding, they are treated separately. For them, the payment on scheduled date and its due date, these two are considered and calculated. When I'm doing the cash flow statement, even though I made advance payments or any payments or received the payments in advance, both the way, when income is received or cash is received, either in bank or in actual, it is recorded. So here, duration, due date, these concepts are not followed in cash flow. These concepts are rather regards in fund flow statement. When it is a fund flow statement, it is permitted to adjust the prepaid or postpaid expenses. But when it's a cash flow statement, these adjustments are not considered. Let's move on. So when I'm doing the cash flow from investment activities, first I will have the amount of earnings. Then if I done subsequently some purchase, I'll deduct that amount. I will have the sale of long-term investment. Then I'll adjust it. Then interest, dividend will be adjusted and I'll make it my cash flow. Let's do it by example. In this numerical, please read the numerical, then I'll just explain. I'll wait for some few seconds. So let's start. The machinery as on 1st April 2011 was 80,000. So we got an opening balance of machinery as 80,000. Machinery as on 31st March 2012 was 90,000. So we got a closing balance as 10,000. The accumulated depreciation on 1st April 2011 was 22,500 and at the end of 2012 it is 37,500. So it means in a year 15,000 amount was charged as depreciation. During the year, machine costing 37,500 with depreciation of 21 was sold at 18,200. So how many transactions are there? So we have first transaction, that is opening balance and closing balance. We have the second block to find out the total depreciation charge on machinery. So we have first block, we have second block. Then it is told that the machine costing 37,500 was sold for 18,200 having depreciation of 21,000. So this is the third thing we are solving in this numerical. And then we'll find out income from this because just opening balance and closing balance of any machine will not make an impact. We are more interested in block number three. I'll wait for a few seconds again. Please read the numerical. I hope reading is done. So let's move on to the next slide and show you the workings. We have sold the machinery of 18,200. We have purchased the machinery of 46,500. So it means we have excess paid 29,300. If I make an account for machinery, now this is a particular account for provision of depreciation. I'll come back for this. If I talk about machinery account, I have the opening balance because whatever the assets, they have debit balance. So opening balance 80,000 and closing balance is 90,000. During year, it is shown that my closing balance is increased in second year. So what it means? It simply indicates that if I have closing balance and I have sold the machinery of 37,500, whatever the things available on debit side, it is simply the purchase of new machinery. So here, the first thing I find out the balancing figure and I consider it as purchase. Please read this machinery account only. If any doubt, put in chat box. I'll wait for a few seconds. I hope there is no doubt. So if I just see an account, it is shown as 80,000 and 90,000. So I can say that only 10,000 machinery is purchased. But in actual, if I find out by adjustment of machinery sold and closing balance, the totally 47,500 rupees machinery is purchased. So we are done with the first change. Now let's move on for the second. Let's find out about sold machineries separately. So whatever this balance shown will transfer here as opening balance. Why? Because machinery account is an asset and for all assets, they are maintained as debit balance. So this is machinery. We have depreciation accumulated. Accumulated means till date 18,000. But the person who purchased the machinery, he has paid me 18,200. And this indicates that he has paid more than the cost of machinery. Whatever the amount I received more than the cost of machinery, it is considered as profit, and hence, in this case, the profit which is earned is 1,700. So the balancing figure here is considered as profit because I'm actually having the machine of 37 sold at 39,200 because I adjusted depreciation. So my gain is 1,700. So please remember I have A purchase and B profit. I'll wait for a few seconds. Please go through these both accounts. If you want me to re-explain, I can re-explain. Okay. So I guess there is no issue. So let's move on to our original accounts. So I'll just erase my working so you can see the previous. Now we have sold the machinery, we have purchased the machinery, and we have additional investments. Now this amounts is as numerical given. This we find in first, and this we are doing an adjustment. So from sale of machinery, I have 18,200, whereas I purchased 47,500 machinery. So it indicates that 29,300 rupees I need to pay for machinery. So when I find out the cash flow, it will be a negative cash flow. That negative cash flow indicates application of funds for purchase of machinery. Please remember, whenever you're solving cash flow or fund flow, don't jump for any conclusions because if you directly go on shortcuts, it may lead to a misleading figures and your answers will be wrong. So this is about making cash flow using investment activities. Now, investment and financing, they are parallel to each other. The only differentiation I observe normally is about the purpose or objectives. So let's understand the cash flow out of financing activities. The cash flow act which results in change or composition in owner's funds is called cash flow for from financing activity. So in short, on asset side, whatever the investment activities I'm doing is called, sorry, whatever the capital investments I'm doing, it is investment activity. But on liability side, whatever the fund appreciation in terms of equity shareholders, debentures, bonds, or any other type of investment, they are called as financing activity. The cash or bank receipts of such cash flow is always shown as income. Repayment, repurchase, or payment of dividend in these cases are shown as expenditures. Let's take an example. 2,000 equity shares of N, that is 10 rupees per share, were issued at par. Second, 8% preference shares of N, 10,000, were redeemed at premium of 10%. Dividend paid 2,000. Now, these all are considered as your capital activities. And since capital is one of the source to finance the business, they are being considered as finance activities. So if I have 2,000 shares and value of share is 10, now issued at par, so we have three terms at premium, at par, and discount. If the value is 10 rupees and I'm issuing at 10 only, it is called at par. If the value is 10 and they are issued at 15, so I'm collecting 5 rupees extra, it is called at premium. When I'm charging more than the cost price, I'm charging more than the actual face value, it is considered as premium. Whereas if I'm charging less than my cost price, that is, if suppose value is 10 and I'm paying 5, then I'm getting a discount. So more is premium, short is discount, and exact price is called value at par. So the amount of 2,000 Equity shares were valued at 10 rupees per share. So I have issued 2000 into 10, 20,000 equity shares. So I'm getting this 20,000 money. Second, 8% preference shares of 10,000, they redeem at premium of 10%. So I required to pay them 8%, but I'm paying them 10%. So whatever extra I'm paying 2%, they are premium. So the 10,000 rupees shares, if I paid 10%, the 10% of 10,000 is 1,000. So at redemption, I need to pay 11,000. Similarly, I have paid the dividend of 2,000. So it means transaction second and transaction third, my cash is going out. So if I calculate both, it is approximately 13,000. Whereas in transaction one, because of issue of equity shares, I have received rupees 20,000. So if I want to calculate the cash from financing activity, my inflow minus outflow, the answer will be 7,000. I'll wait for a few seconds. Please read the slide. I hope there is no doubt. So let's continue. Let's understand the calculation of increase or decrease in cash and cash equivalents. Now, why this required? If suppose there is no adjustment given in a balance sheet and you just have some opening balances and some closing balances. So in absence of adjustments, we are always need to check the difference between opening and closing. Now, if the opening is 10,000 and closing is 15,000, it means 5,000 is charged in that year, straightforward. But if some adjustment is there, I need to prepare the working note and then understand the actual cash outflow. This is a format for cash flow statement. Please go through the format. I'll wait for a few seconds. Let's continue. In cash flow, the sequencing of activity is not important. Understanding the logic of preparation is more relevant. Whenever we start cash flow, please remember the preparation of cash flow is exactly parallel like cash budget. The first we calculate the cash flow from operating activities. For that, we need to find out the gross profit and the gross profit, that is the profit before tax and extraordinary items, is our cash flow. Then what are the provisions like depreciation, tax on or something? We have to add back to the profit and find out the net profit for cash flow statement. After this, we have the adjustments for fixed asset, interest, outstanding, sorry, fixed asset. We are adjusting our current assets, foreign exchange, dividend, change in capital structure, and so forth and so on. We never adjust anything outstanding, which I mistakenly said. And in the end, we'll find out what is my everything. So the items which are shared here are dividend, tax, forex, and share capital. So whatever we discuss, you can just put in if the cash is coming in or going out. And by this way, you can find out the cash balance. I'll share in group the format of cash flow. No need to worry about the same. So we have completed our session on cash flow concepts. Now we need to practice the numericals on cash flow. What I suggest, please take the screenshot of this numerical. Now, why the screenshot of this numerical is essential? Because you can just keep it for your reference. We are going to solve this numerical in next session. So we have the adjustments, and I'll just show the next numerical which I want you to take a screenshot. So again, take the screenshot of this numerical. So that's all. We are closing a few seconds early because if I start the numerical, it will not finish less than 20 minutes. So next session is very crucial for understanding the major solving steps and practical applications. So all of you, please continue your learning. Now, one more instructions, especially for Manoj and Yogeshwari. Please write your names properly. Follow the format which is expected because I have seen both of you not following the norms. Like you have to maintain your roll number and then your names. If you forget to write your name properly, then your attendance is not recorded. We are seriously counting on your attendance and the strict action against missing students will be taken. So attend all the sessions and keep learning. Now all of you can log out and join the next session.